Hi, good morning, friends. I have another company update for RPP Infra Projects Limited. The company is backed an order of 108 crores. However, the current trend of the company shows that the price is continuously dropping and the value erosion that the investors have to go through. So, we'll just quickly go through the details of the contract. It's a contract provided from the state superintendent engineer Promotions Corporation, Tamil Nadu. Terms of the contract 15 months. Price is 108 crores. So last one day 4%. Overall last 1 month 31%, and last 6 months is 40% erosion. So it's a combination of factors including weak long-term fundamental strength, concerns over pledged promoter shares, which is 26.7%, recent market volatility, and a declining technical trend, and potential selling pressure due to consecutive losses indicating a bearish sentiment towards the stock. So, poor financial performance might be experiencing a weak operating profit growth and a below average return on equity, leading to investor apprehension about its long term potential. Higher promoter pledge shares 26%. Market volatility, market overall fluctuations can negatively impact even relatively stable stocks, like causing temporary price dips. Technical analysis indicators like moving averages and volume trends might be showing a bearish pattern, further contributing to the decline. Has reported recent quarterly losses, it can trigger selling pressure from investors seeking more stable options. P/E ratio of 8.62, which is low. Overall book value 100, price 1.17, its book value. Return on equity 22.6%. Overall revenue growth of 38% in the last 3 years. 51% promoter shareholding, 48 public, which again is a high factor, again impacting the volatility of the stock. Current ratio 1.67, quick ratio 1.72, quick ratio 1.67, earnings TTM 15, inventory turnover ratio 16, interest coverage 5.43, long term debt to equity 0.04, total debt to equity 0.1, asset turnover 1.67, cash 39 crores, debt 41 crores, market cap 589 crores, reduced debt, almost debt free, debtor days have improved to 42. Company's median sales growth is 16.6%. Company's working capital requirements have reduced to 75 days. No dividend payout, low return on equity 8.4%, contingent liability of 303 crores. Promoters have pledged 26.8 crores. Promoter holding has decreased over last 3 years 4%. Incorporated in 1995. Is engaged in construction across multiple infrastructure verticals like roads, buildings, industrial structures, power, irrigation, and waste management. The company is an integrated EPC company with a portfolio across sectors including infrastructure development, residential and commercial buildings, and water management. It executed 200 civil construction projects across South India, Maharashtra, Madhya Pradesh, Uttar Pradesh, Chhattisgarh. Infrastructure, waste management, buildings and others. Clients: NTPC, L&T, CPCL, TNPL, Siemens, Apengo, Elcott, etc. Q3 FY25, company has an order book of 2,994 crores overall with 44 projects. During 9 months FY25, it got 15 domestic projects worth 1,575 crores and a residential complex project, Legend 96 in Sri Lanka, worth 764 crores. Domestic inflow 65, buildings 29, and water management 6. The company has decided to stay engaged in short-term projects of less than 24 months with small and medium project sizes of less than 250 crores of operating 12 to 13% of EBITDA. Okay, so let's go on further. This was the price as of 28th of February. Past 5 days performance, past 1 month 31%, past 6 months 45%, overall year to date a 40% negative return. The logo of the company, then this is one of the projects that the company was doing, then one of the rail projects that it was ordered from the Southern Railways recently, Metro Rail News Infra Project with the joint venture. We've already been through this information, already been through this. We've been through this as well. High of 255, low of 97, book value 100. Book value shows that one or two on a different site, so again it's more or less the same. High of 245 on 17th of December 2024. 17th December 2024, high PE of 16.7. And these are the other peer industry comparisons in terms of market cap, so more like an apple to apple comparison. You have price band, some have a good price range that can be looked into, however most of them will need further detailed investigation. So ideally these are very small companies. Reliability of regular revenue and business is something that is questionable. They are not reputed brands. So price to book value, you can see some have a higher price to book value, so something that you can look into. Price to earnings, these like 175, 120, 138, 68, these are very high, which which may suggest that these companies are not doing very well in terms of earnings per share. So the lower the price to earnings, the better chance for you to uh, have a long-term value. Current trend if EPS, you can see here 13, 1.5, 0.6, 9.3, 11.21. So look at shares in Vishnu Surya Projects, Deepak Builders, Trans India Real Estate, some of the companies that you can look into. Return on capital employed, you can see some are very high. So Deepak Builders 45, Trans India Real Estate 35, Vishnu Surya Projects another 35. So these three companies are definitely looking to Suratwala business. Not really sure, maybe something that can be worth looking into. Sales growth downward trend. Profit growth has increased in the last 1 year. ROE increased, which shows good. ROC shows increment. However, the last quarter results haven't been very positive, which is the reason why the stock has fallen. It hasn't been able to match the kind of growth, revenue growth, and the profit growth that it demonstrated over the last 1 year. Debt to equity, which is very good. Cash price to cash flow slightly high, could be better. This is very good. This is also excellent management of funds, efficiency of the business and the funds flow. Yeah, you can see the pledge is 26.7%, which is a concern. The rest, I think we've all gone through that. Debt has been reduced, good revenue growth. However, that is history. We need to look at the current trend of the last or the next available quarter. Uh, Efficient cash conversion cycle of minus 80 days. All relatively all other stuff is good. This is the quarter on quarter comparison. Increase, then decrease in the profit as well. Again, slight increase, then a stable kind of return. However, with stable profit, the overall expected growth did not meet the concerns of the market or the expectations of the market, which is the reason why you see a drop in the share price and the price value constantly dropping. This is year on year comparison. You can see the comparison between 2020 and 2021. Net profit reduced, sales also reduced. Sales went up, however, net profit down, further down. Here, profit grew, sales grew, FY24, which is the reason why the stock did well in the last say 6 9 months. And over the last quarter, you can see the sales did not do very well, which is the reason why things started coming down. Reserves have increased slightly, but not something that would be concerning to anyone. 5% dividend, and these were way back in 2017 2018. So one of the largest investors in the company with a holding of 9.51 crores, super investor. This is the promoter holding. These are the 3 4 owners of the company, promoters. High and low. We've been through all this. We've been through this as well. Includes another income of 40 crores, which is a concern. Promoter holding has decreased in the last 3 years by 4%. These are the other comparative companies in the infra projects sector. These are more larger market cap companies compared to the other sequential uh, peer-to-peer comparison we did in the previous site or screen. These are more relatively stable ROCs with a broader market outlook, but definitely something that can be compared to possibly higher market capitalization compared to RPP Infra Projects. Sales, this is more visible in the downward trend, up down. Then same thing with the profit. Net profit has remained more or less the same, which is the reason why the expectations of the market are not met. Here again, the expected net profit is about 67 crores, is something that we'll need to verify at the end of FY25. Market sentiments are poor, so people aren't investing in the market at the moment. Something for you to observe. You can see reserves have increased here to 459 crores, so signifies some improvement in the overall position of the company. And debtor days have improved, inventory days have increased, working capital days have reduced, which is a good sign. ROC has improved in the last year. However, we'll have to look and observe how it does in the FY25 last quarter ending end of March. So thank you for watching, friends. Something to keep in mind that the company has not been able to meet the expected market demands on profit growth and revenue growth in the last 3 months of the last quarter, which is the reason why there has been a drastic correction in the company's stock value overall because of the uh, withdrawal of FIIs from the market has caused the company to be on the losing end, and we can only see improvements in the market where people would expect more investments to come in. Once you see the next bull run, you will see this stock would also automatically start going up. So at the moment, we need to be careful. We need to keep evaluating if you are invested. There is a chance for the correction if the revenue and the profit growth doesn't increase in the next quarter. Then you will see a further correction, and it could be a good opportunity to buy, especially with large amounts of stock being uh, held as pledged by the promoters. There is a possibility there may be some selling if those pledged shares are sold in the market. So something that definitely will impact the overall fundamentals of the company, and there would be an opportunity for people to invest. But again, need to be cautious and keep a track of the performance of the company. That will be the trend setter for the future, possibly in the next 2 to 3 years. Thank you.